everyone. My name is Ram Dhamija. Welcome to my channel. So finally, October month is over. It was a very good month for Nifty, wherein Nifty actually went up by almost 5 to 6%. And though some consolidation came in towards the end of the month, but overall, all in all, it's been a good month for markets, for stocks, for except for options, but otherwise it's been a good month for gold and silver also. So commodities did well, markets did well, and it was a month which was characterized by a good up move in Nifty as well. Also, if you see the last 1 year returns of Nifty have actually become positive again if you compare it versus last October, because the correction had set in September, and October was when the fall actually started. So it's actually been almost 13 months of correction that has happened. We are back to the all-time highs, near the all-time highs. We are just probably a couple of percentage points away from it, but it's been a very long year. So if you see, when the correction started in September 24, everything was very highly priced, and things were actually looking very frothy at that point in time. And the election results were just behind us, and after the brief election fall, the rally had again started. And till election day, it was dominated by PSUs, and mostly, public sector enterprises, defense, railways, etc. But after that, texture of the rally changed, and the last 3 months was just all about momentum, alpha, and small caps. After the correction, all these names went into a deep time and price-wise correction. And the bottom was finally made on April 7th, 2025. Though we hit one bottom in February, but March we recovered, and April 7th was when the bottom was finally made, and that coincided with the tariff day in US. And then we saw that the texture of the recovery also changed. So the recovery was led by financials, not by small caps, but by financials, large caps, somewhat mid caps. Momentum and alpha names are completely thrashed. Even now, they're still 20% down from the top, and the momentum has just vanished out of the market. So this is how the texture of the market changes every now and then, and you will see this happening. So I will talk about it in detail tomorrow. Let us see the highlights. What have been the highlights for the markets in this particular last week, and how is the structure looking like going ahead into next week? So let us begin our video today. Let us start off with the Nifty chart. As you can see, I had been maintaining. So if you have been following my videos, I had been maintaining that we will be in a consolidation phase like this, in a zigzag kind of a pattern, and then probably we will cross this 26,200. So exactly that is how it is playing out, because this is actually good. So if you see over here, 23rd October is when we made the high. After that, we went into some correction. Then again, we tried to make a high on 29th October. Again, now we are in a correction. So, 2-3 times we are going to test this level of 26,100 odd. And then possibly with a gap up, we are going to break the 26,200. So this is how the structure of the market is, and it is very healthy, I would say. These corrections are very much required. So don't be afraid of too much, that okay, oh, the Nifty actually fell from 26,000 to now it is at 25,700, so it has corrected. See, there will always be news flow that will keep on coming in, which will say that okay, there is some tariff news, some geopolitical news, some bank Nifty news, some particular equity news, something or the other will happen. Reasons for the correction will be made, just as reasons for the up move will be made. So don't be too perturbed about this normal consolidation, and it's actually good. And if you see, we have got the support at about 25,673. This was the top that was made on 30th of June, and after that we kind of crossed it with a gap up, okay, on 20th of October. So this will act as some sort of a support, and then the next support possibly is at 25,100. I don't think we'll go till there, because even if you see the last high, which was made at 25,400, it should also act as a support. But of course, then the support ultimately comes at 25,100. I don't think we're going there. So 25,600 is something to look forward to, and if that breaks, then we'll get into some deeper consolidation. But you should keep your eyes fixated on 26,000, this 268 or whatever that all-time high number is, because once this breaks, then it's blue skies for the market. Typically, whenever the start of the bull market happens, and I'm not saying that it will happen today, maybe it happens after 3 months, who knows, it just like it happened in 2023, it happens in March, maybe becomes the bottom, and after that we start running. But whenever it happens, the point to note is that whenever the last highs will be broken, then the market is not going to stop at 26,500, and it is going to rally much higher because the next leg of bull run. So just to give you a context, when in March 23 the market actually broke 18,000, it did not stop at 20,000, 21,000, right? It actually went up to 26,200, and then we have gotten into this correction. So similarly, if you look at what happened in 2019 when we made 2000, 12,000 top in Nifty, then we corrected in COVID at 7,000. We broke again 12,000. We did not stop at 12,000. We reached 15,000 and then 18,000. So whenever the previous highs are broken, then the market will not stop there. It will go much higher. That's the limited point that I'm trying to make. So, if you have not participated in this rally, then not rally, actually it's consolidation right now. So if you're not participating right now, then you should not crib when the market actually goes up, because the market will eventually go up, and at that point in time, a lot of retail people will try to get in, and they will not get in even when the all-time highs are broken. They will get in at 30,000, 32,000, when the market will be nearing its peak, and then they will probably be able to get the upside, some upside, and then the market will fall down, they will move out. So this is a typical retail pattern. So the time to investment is now. The time to investment was last 1 year, when I have been saying, please use the dips, the correction, to accumulate good quality mutual funds, good quality indices. Try and avoid direct stocks unless you are a complete market participant yourself. So do that. This is the right time to build your portfolio for future, because when the bull market comes, so let's say even if you start today to build your portfolio, it's not that you're going to put everything in lump sum, right? Possibly you're going to start off with this SIP. So as it is, you will not, your risk is limited, because if the market goes down, your dollar cost averaging, because your SIPs will go at a lower amount. If the market goes up, then at least you have started something. So you will at least have that confidence. You'll at least have that buffer, that okay, I have certain amount in my portfolio which has gone up, so that acts as a buffer for me. So limited point is, actually you don't have a option, because if you're not invested in equities, if you're not invested in assets for that matter, then inflation is running very, very high, especially the segmental inflation, because the inflation which affects us, let's say education, transport, and so on and so forth. So those inflation numbers are much high. Education is very, very high. At least 10 to 15% kind of inflation is there. And if you don't have assets, if you're just earning and not investing properly, then you are missing the bus. Your money is not working as hard for you as you are. So that is why it becomes very, very critical to invest. And I'll tell you what I do. I help people make mutual fund portfolios. So if anyone is interested, they can WhatsApp me on the number given below, or they can fill up the Google form again given below in the description. And I offer free consultation also. So we can have a 10-15 minutes chat as well regarding your portfolio. If you already have a portfolio, I can evaluate that portfolio for you free of cost. And then we can have a discussion about how you want to build your portfolio going ahead. So if anyone is interested in exploring this option, they can WhatsApp me on the number given below, and I will help. So I'm a registered mutual fund distributor, AMFI registered, NISM certified, and I work with NJ, who are the largest mutual fund distributors in India, and having a AUM of about 2.5 lakh crores. So it's a very, very robust system. It's a and mutual funds are the best, because for retail people, direct equities, the kind of drawdowns that you see, 20%, 30%, you invest in a stock, it goes 50% down. What are you going to do? Are you going to invest more? Answer is no. How to size, how to do position sizing, which sector to invest in. So all those things are taken care. Even within mutual funds, you can construct it the way you want. You can construct it by market cap weighted, small, mid, large. You can take factors like alpha, momentum, quality, value. You can have international exposure. So there are so many things that you can do. With stocks, you'll be just scratching your head, which stock is doing well. Then some news comes in, you don't know whether that's correct or not. So it's highly avoidable, because our aim as a retail participant should be to generate wealth for ourselves. We have our full-time job, we have our own business. That is where our alpha lies, not in terms of trying to identify the next multi-bagger. Mutual funds are very, very good at doing that, especially if you take the top mutual funds. And in my portfolio, I ensure that all the mutual funds that we take are the top notch in the first one or two quartile. So now let's come back to the video. Now let's look at Bank Nifty, how Bank Nifty has been performing. So this is the Bank Nifty chart. Bank Nifty made an all-time high. Bank Nifty has been making new all-time highs every couple of months. So 23rd is when they made a new all-time high at about 58,580. It is again gone into consolidation mode, and it is right at the support level of 57,640. There was some news which came which stated that Bank Nifty weightages are going to get changed, and that led to some sell-off on 31st of October. But now it is at support level. So that again, how do you counter such news? There's just no way to counter. I mean, there are two stocks in Bank Nifty which make up bulk of the weightage. Now, a new rule has come in that those stocks cannot have such high weightage, and there has to be more stocks. Now, those poor stocks haven't done anything wrong, but they will get sold off, or at least there will be pressure on those stocks, because simply because people will reduce the allocation. The ETFs will have to reduce allocation. Mutual funds will have to reduce allocation in those stocks. Though there has been timeline that has been given. So I'm saying these kind of news in which the company has actually got no control, right? The stock has got no control, but it happens. So what do you do? So just be careful. That's why I say, individual stocks are not for retail investors. Now let's come to the Nifty moving averages. So as you can see, Nifty moving average at 200 days placed at 24,327, comfortably placed. And I had mentioned before, Nifty 20-day DMA has crossed the Nifty 50 DMA. This happened somewhere during last month, or somewhere on 19th 20th of September. So after that we made a bottom, and now we are up. So till the time these two again cross back, there is nothing to worry per se. And even the 20 DMA is placed at comfortably at 25,500. So till the time that is breached, we are in a good bull run, I would say. Now let us look at in terms of where the sectors are, individual sectors are from their 52-week high. So if you look at midcap, has done really well. So midcap is almost midcap is actually at 52-week high, and midcap also made new highs in between. PSU banks has come back in a big way, and there was some news in online that there is going to be FTI limit that is going to be increased in some certain PSUs. So that kind of propelled the market. Nifty broader market is doing well. Nifty 500 is doing much better. Commodities and infrastructure started to do well. They are again at the 52-week high. Banking and financial, as I have said, they had been leading the rally, so there's no surprise over there. Nifty is at minus 1.5 from its 52-week high. And if you see what else, autos is at minus 3.3, so autos is corrected. Nifty next has not been able to make a dent, so it's at minus 5%. FMCG minus 5, BSE small cap minus 6. Momentum and alpha, as I was saying, these two are momentum indices. They are at minus 15, but they are even doing better than IT. IT is struggling big time, minus 22% now. So though I will show you some chart which will show you that IT has been decently performing in the last 1 month, but still it is down 22% from its 52-week high. So IT is in big trouble right now. This is one interesting chart which perhaps I'll see if I can talk tomorrow. This shows you the Nifty returns over last 1 month, which is 4%. Last 3 months Nifty has given a return of 4% again. Last 1 year Nifty has given a return of 7.5%. Now this is the main point, that even in a flat market, even during a correction, Nifty has given you 7.5%, which is equivalent to your FD returns, and that too, in a tax efficient manner. Though equities will be long term will be taxed at 12.5, versus if you are in the highest income slab in FDs, you'll be charged at 33%. So I'm saying there is no justification for retail investor to keep too much money in debt. Okay, and why I say too much money is because certain portion should be there in terms of your asset allocation. You define your asset allocation, how much I want in debt, how much I want in equity, how much I want in gold, how much I want in real estate, and then work according to that. So first level is making your allocation. Second level is within those allocation, what should you have? So within equities, what should I have? Should I have mutual fund? Should I have direct equities? If let's say you decide I should have mutual funds, then which category of mutual funds? If you decide I want to have 20% debt, what kind of debt? Should it be all FD? Should it be debt fund? Should it be corporate bond? Should it be PF money? Whatever it is. So that debt also you have to decide. So I'm saying it's a quite a big maze, and frankly, if you take help, it's much better. Consult your financial advisor, whoever you trust knows about this. there are lots of WhatsApp groups that you can join, and where a lot of information. In fact, I also have a WhatsApp group, so in case you're interested, you can again fill up the form and I'll add you, where I share my perspective about the markets, and there's good knowledge sharing that happens. So things like that, do learn, try to understand how things are. That will make you a better investor. Now let's come to how the various uh, indices have performed over the last 1 month. So if you see, VIX has been on an uptrend. So India VIX has gone up from 10, it had its rock bottom. Now it is somewhere around 12-13% VIX. So that's, VIX is inching up. Maybe it's because of elections or whatever results in Bihar and so on. So it might have some impact, and some geopolitical news also will have an impact. So 18% VIX is up. Infrastructure has performed well in 6%. IT, as I was telling you, is up 5% over the last 1 month. Metals is the big story. So metals has been really, if you see YTD up 22%, last 1 year 13%. So metal has been the big story. Bankings 4%, midcap 3%, and the worst performers. Media I don't even count because there's no serious players in that particular index. Very small players. MNC is 1%, FMCG is 2%, pharma is 2%, and so on and so forth. So this is the structure of all the indices right now. If you look at the international, I'll take you to what is happening internationally. So if you look at international cues, so US 10-year and 30-year are doing all right. They are at comfortable levels. S&P, Nasdaq, all are making new all-time highs every day, and this has been going on for such a long time. And unfortunately in India, there are very limited avenues to invest in them, because there was a mutual fund limit that was crossed in of $1 billion, which was crossed way back. So you find it very difficult, but still there are some funds. If anyone is interested to invest in international funds, I can help again. There are some funds which are still available, but otherwise what do? You go and buy ETF. ETFs are priced at a premium. Most of the mutual funds don't allow lump sum investments. So what do? How do you get exposure towards US? Though at this point in time, I would not recommend too much exposure in US, simply because it has run up a lot. The right time to invest in US was April 7th, when I told all my clients you should invest. The yen carry trade, I don't know how many of you remember or not, but at that point in time, Nasdaq fell 17%. I told all my clients to buy. People bought heavily, and that, thankfully, at that point in time, even the investments were open. So whenever you can invest, do invest, because you just don't know when investments will also stop in some of these things. So still they are open, but you should probably look at the SIP route, because I feel the US markets are slightly overvalued right now, and they can correct simply because no correction has come for a long time. Now let us look at one worrying thing which has happened is, Brent is all right, but US dollar index is now closing at 100. This is one worrying thing. So DXY was very well behaved. If you see DXY over the last 1 year, it made a peak at about 110, and this was the kind of bottom of the equity markets, and after that it has just gone up. So it went up to 96, and now it is going at 100. So whenever DXY, just remember this thing, whenever DXY goes down, it is good for the world equity markets. Whenever DXY goes up, it is not so good. So at 110, dollar was so super strong, and the world equity markets were struggling, and so people are saying DXY might come down to 90. If that happens, then you can expect some big huge rallies happening worldwide, especially in the emerging markets, but right now it is at 100. What else? Gold and silver again have bounced back from their lows. So silver went to $46. It is now back to 48, and backwardation is also back. What is backwardation? When the price of spot is higher than the price of futures. So price of spot you can see is 48.67, price of futures 48.3. Though this backwardation is not so large, but backwardation is back, and gold is above 4,000. So anyone who felt left out investing in gold, perhaps this is a good time. They can look at investing in gold as well, because gold has corrected from 4,400 to 4,000, almost a 10% correction, healthy correction. And after the healthy correction, also 45% dollar returns, 51% INR returns is huge in last 1 year. So gold has been doing stunningly well, and same is the case with silver. Silver last 1 year 49% returns in dollar, 56% in INR, and that has corrected big time in INR. Silver has even corrected, I would say, to the tune of 25%, simply because there was huge premium that was there, and that premium is now vanished. So one should definitely have some allocation to gold, and if silver, one feels like they can have some very little allocation, because it's highly volatile as an asset class. So that was the wrap on the markets today, and I think the markets are looking fine. Some consolidation is happening. Let's see how November turns out. October has been a good month. Typically October is a very bad month where maximum corrections have happened, be it starting right from 1929 when the Great Depression crash happened. That happened in October to 2008. I remember Lehman Brothers happened in 2000, October 2008. So all the big crashes happened in 2000. Thankfully we are spared. So October is a very rough month, and this time it has been a good month. So let's see how November comes in, and I hope it's going to be good. And I hope finally your portfolios are starting to look good. If not, then you really need to see what is wrong with the portfolio. And as I said, I can do a portfolio scan for you. So if you're keen on that, you just WhatsApp me, and we'll connect, and we'll have a small chat about it, and I could probably suggest you how to go about building your portfolio. So that's it from me now. If you liked my video, please do subscribe to the channel. A lot of you haven't. Please do, because I hope that I provide a lot of good value to people. And please do like, share if you like this video. And I shall see you soon with another update. Take care. Bye bye.